Well, hi, my name is Misty Dowling. I'm with Gem City Real Estate Group, and I have Jennifer Goldsby with me today from Diamond Mortgage. She's also known as the RENO-GAL. So today we're diving into renovation loans. So let's just start, Jennifer, and with the buyers and how does a renovation loan work for a buyer?
Yeah, so the interesting thing is with these types of loans, anybody who's looking at a property that might need some work, and that could be something as simple as some repairs that popped up on a home inspection, or maybe something that would prevent the property from passing appraisal. Normally in those circumstances, that might end a deal. That might delay everything right there, or possibly kill everything right there. But in this instance, you can utilize renovation financing and move forward. So it allows a home buyer to purchase a property and finance the costs of repairs into their loan. So it's one loan, one monthly payment, and they use that financing to do anything that would be quote unquote required, or anything that they would desire to do. It could be, maybe there's nothing wrong with the property except the kitchen's a little outdated, or they need an extra bathroom, or they want to increase some square footage, for an ensuite or something like that.
Sure. Yeah, that comes up quite often. We hear a lot that people love a home, but they don't love the kitchen or they don't love the bathroom. So with the renovation loans, it can be something as simple as all these upgrades, correct, for the kitchen, the bathrooms, but they have to come up with some kind of creative financing because they may not have the funds
Yeah.
to do that.
Yeah, and
So
if you think about like some first-time home buyers, I'm going to use my example. When I first bought my home, everything I looked at, there were about two things I wanted to do for sure with every property I looked at. And that would be replace any of the carpeting and interior paint, repaint the whole home. Some of the houses I looked at, I would need appliances. And if you're a first-time home buyer, you might have just enough to get into the house, just enough for your down payment, your closing costs and prepaids. You might not have anything left over for those things. So it could be something even as simple as, redoing flooring, interior paint, and appliances.
yeah, which are all very important because first-time home buyers, especially with interest rates and just the cost of everything right now, it's not easy to have that cash right on hand. So when we get to loans, there's all different kinds of loans. What kind of loans can you mix renovation loans with?
Yeah, absolutely. So you could do a conventional renovation loan. One of my favorites is the Fannie Mae Homestyle renovation. You can do an FHA loan with a renovation component. They're called the FHA 203K loans, and there are a couple types of those. And then you could do USDA rehabilitation and repair. There's a couple different variations to that program. And there's a VA renovation loan as well. It's called VA alterations and repairs.
So normally there's a lot of restrictions with rural development, USDA, and FHA. How do you get around those specific expectations that are normally there for those for a renovation loan?
Yeah, that's an interesting question because a lot of realtors, if a buyer will qualify for conventional or FHA or any kind of government financing, they're going to want to favor the conventional financing because they find that sellers will favor conventional financing over government financing. And I'm generalizing here a little bit, but on these types of transactions, there's usually something wrong with the property. So the seller might not be quite as specific about the type of financing that they would accept. So in those cases, I think these types of loans are perfect because most of the time when an agent is saying, hey, you probably need to go conventional because this isn't going to pass an FHA appraisal, that's because there's a hindrance, there's a block there. But this type of financing, it gets us over that hindrance, over that block, and it allows us to fix whatever the problem is. So now we don't really have to worry about, I really need conventional financing so I don't have troubles with an appraisal. It's a moot point because whatever troubles you might anticipate, we're going to build the costs for those repairs into the mortgage and move forward.
Which is a really big deal because I have a lot of people that come to me and say, well, I want to use an FHA or rural development, but my price range is $100,000 and there aren't homes that are in great condition in that price range anymore.
Yeah.
We're just being real. The market has definitely increased. And when you want to stay under $1,000 for a mortgage payment and you are looking at, $100,000 home that then needs repairs, we have to kind of say, okay, well, you can't go FHA or rural development on this because of the repairs. So again, the renovation loan steps in and, really fixes that. It's a solution to a problem that we didn't realize that we needed.
Yeah. And overcomes the objection for sure. Definitely.
Yeah, for sure. And so you mentioned appraisal there. So I wanted to touch on the appraisal because I think it's so important how you worded it to me on the appraisal, that it's not, I'll let you say it because I don't want to say it wrong, but it's not being necessarily appraised for the value that it as it sits.
That's
Could
right.
you touch on that a little bit?
Sure, absolutely. So anytime you're using a renovation loan, we're not worried so much about the current value of the property. At least in a purchase transaction, I really don't care what kind of condition the property's in or what the as-is value is. Now, as an agent, you're responsible for determining the as-is value so that you guys can draft the offer. But from a financing perspective, I don't really care so much about as-is value. What I do care about is what kind of condition is this property going to be in after it's been renovated, and what will it be worth after it's been renovated? Then we're going to build the financing on, we'll call it the subject to value. The value of the property subject to all the improvements and repairs that are going to be made. It's a really slick feature of renovation financing for a couple of reasons, but one of the reasons I like is, we're coming off of a really tough seller's market, right? Where buyers had to pay above asking price to get into a home. And when you do that, you've got conversations around, say, appraisal gap funds. And, and the essence of that is, if a buyer is going to purchase a property and they are willing to pay more for that property than it's worth, they've got to make up the difference plus their down payment, right? That difference is called the appraisal gap money. But when it comes to renovation financing, they're not going to find themselves in that really competitive market if they're buying a property that needs repairs. But if they do, even if they do, and they find that they're competing against other offers and they need to offer above asking price, we build the financing on the future value of the home after it's, what it's worth after renovations. So appraisal gap money is never an item that we have to deal with in the renovation world. We're building the entire loan off of the future value of the property. And the only other time you can do that is in new construction. So it's a pretty neat little feature.
Yeah. And so if the home has been condemned or it's in really bad condition, but somebody can see the value in it, what would happen during that kind of process? So if it's just run down, utilities aren't on, and it needs a lot of love, how does that handled with a renovation loan?
Yeah, it's, most people would look at that property and say, I don't have the cash to buy that. I can't afford to buy that home. But again, we don't care what kind of condition it's in today, as long as the local municipality is going to allow somebody to purchase the property and renovate it. That would be the kicker. Is the local municipality going to allow that? And they will, on a condemned property, if it's structurally sound, they may, or if it's an issue where a structural issue that we can repair. I mean, let's face it, there are some homes that they just have to be torn down and rebuilt, and we can finance those too. But, if it's something that is salvageable, I'll give you an example. I had one here recently where the entire home was covered in just layers and layers of mold. It was disgusting. And the new buyer was able to come in, and it, structurally it was sound. Obviously there was a safety issue, a health and safety issue, right? So structurally it was sound, it was condemned. Nobody could go in there without a hazmat suit. But, once we did the mold remediation, it required tearing out all of the drywall, and all of the flooring and everything. But once we did that, you could proceed with the project. So we really, when I say we don't care what kind of condition the property's in, I do mean that. It could have been a fire. Yeah, it could have been, you see some homes that are damaged by fires. We really don't care, what kind of condition the property's in. We just need to know, can we fix it? And if we can fix it and there's enough equity in the property to do that, we press forward. You did ask about utilities. Again, another beautiful feature of these loans is utilities do not have to be turned on. They do not have to be functioning before the appraiser goes out. And as you and I know, that's sometimes an issue if the home has been winterized, but not an issue with renovation financing.
That's great. Because I know in our Illinois contract, we agree that the utilities will be on, but in some cases you can't do that.
That's right.
So I think definitely seeing the potential in the buildings that we live in a historic town. I mean, we have a lot of historic homes. So so many people can see the potential, but now this gives them an option to finance the potential, which is amazing.
Those historic homes, do they fall under the jurisdiction of a historical society?
Some in some neighborhoods, yeah, if they're plated. In our town, then yes, they have to follow certain regulations to redo them, and they have to meet those standards of the original woodwork, windows, things like that. It has to be, they do have guidelines to follow.
Yeah, I was gonna say, the only caveat when you're working with a historical home that's actually under the jurisdiction of a historical society, you do have to get that society's permission to do the repairs and improvements you want to do. But if you can get the permission, we can move forward.
Yeah, and usually they want improvement. They want those to stay in the historical society. So yeah, that's definitely something that, I mean, again, we touched on another thing that can fall under this renovation loan. Another one that you touched on with me, and I know we could dive into this for a very long time, but I just wanted to mention the foundation, because you mentioned foundation, and I'll tell you what, I don't know if this is the year of foundations or what, but I've had 3 homes in the last 6 months that have had major foundation problems. And then the seller, thank goodness they had some equity in the homes, and it's probably because of the inflated market. But if you don't have that equity, what are some options that, with foundations that you can do with a renovation loan?
Yeah, I have to agree with you. I think I know I've had at least 2, and I might have had more, where somebody brought a property to me and they said, hey, we're interested in purchasing this. And the entire property was renovated except for the foundation. And in all the cases that I've looked at, we're talking anywhere from $60,000 to $70,000 in foundation repairs. So
Wow.
as long as the comps in the area will support it, if the homeowner is asking for too much and there's not enough equity to get the repairs done, I might have one option for them. I'll share that in just a second. But as long as there is enough equity in the property and the comps in the area will support it, then we can finance the costs of foundation structural repairs. If it's a situation where value is going to be really tight and we're just not sure that there's enough value that we're going to hit that appraisal value that we need, I like the FHA 203K standard loan, because it actually allows you to utilize up to 110% of the property's value to structure that loan. Now, it does mean that the new homeowner is going to go in a little upside down, but with property values raising the way they have been, they may not be upside down for too long.
Yeah, well, and sometimes I know that the house the one I just dealt with, they actually had to get out of it, the buyer did, because the seller just couldn't afford it. And they were asking, could the buyer put that on their loan? And the buyer just wasn't willing, but we also didn't look into the renovation loan. Maybe they would have been more willing if it was something they would have known that they definitely could afford and it would make sense. And I mean, your foundation is literally the best thing that you need to invest in. So with the home. So it would make sense to do that, and it would make you feel good about buying a home knowing that you could do that immediately. So I love that that's offered in the renovation loans. Like, it's just something to keep in top of mind. Can you kind of give me just a really quick rundown of the process, the timeframes, things like that for when you buy a home this way with the renovation loan?
Yeah, absolutely. So the pre-qualification process is pretty much the same as it would be for any other home purchase. We do ask that that the home buyer completes an online application, and they'll be required to upload some documents. So some things that they should have handy include the last 30 days pay stubs, the last 2 years W-2s, maybe even the last 2 years tax returns, last couple months bank statements and ID, just to give you a short list. So have those things ready when you go to apply online, submit your online application, and then we'll get you a pre-qual letter that you can use to go out and shop for a new home. Now, once you find one and you're under contract, I'll say that the hardest and longest, most frustrating part of this is finding a contractor and getting a bid. So if you're under contract to purchase a home that needs some work, we really need you to find a contractor very, very quickly. I kind of budget about a week to find a contractor, and then another week to get a bid from that contractor. So that's, in my mind, that's kind of my timeline budget for that piece of it. In some cases, a consultant may be required. They kind of act as a project manager. In other cases, we don't need one. So depending on whether or not we need one, we might find one locally and introduce them to the home buyer. And after we get the contractor's bid and the consultant's report, then we order the appraisal, that subject to appraisal that I mentioned. When the appraisal comes in, we push the loan through underwriting, clear all conditions, and then get our clear to close and move to closing. It's after loan closing that the renovation project begins. I like to ask for a 60-day window to close. Now, do we really need 60 days? I mean, as a lender, not really. I mean, we could pretty much close these loans in 30 days, but that's assuming you've got a contractor and a bid and you're ready to go. So I like to give a little bit of a cushion because we don't know how long it's going to take for a buyer to find a contractor and get a bid. And if you've got a consultant involved, that's probably another week or two that you're adding. So really the first 30 days is kind of project planning, if you will. And the second 30 days is getting the loan through, getting an appraisal and getting the loan through underwriting and closing.
So it sounds like if you are considering the renovation loan, you want to get your ducks in a row. Reach out to contractors, let them know what you're doing, and that you might be calling them. And that's what you have resources for. So you have a realtor, you have your lender, and it's good to have these professional resources because on my end, I can only give them you as their resource. I don't dive into the loan part of it, but this is why it's so good to educate us agents, because we need to know that this is out there and how to give that resource. So it's so important for us to have that relationship with lenders. And I just really appreciate you taking all the time to do that with me and educate me. There's so much to learn. I wanted to touch on one more thing before we end this, but on the seller side of this, so the market's changing. We know that interest rates have gone up. We know that we're in a recession, which is actually a reset. A reset is good. A reset means that the market's going to come down a little bit to where it should be, and we won't be so inflated. But when we talk about that, we have to be realistic that now we're not seeing homes flying off the market. We're not seeing 100 offers on a property, and we're seeing open houses. I mean, we haven't seen open houses in 3 years. So that's a big deal. We definitely see a change. So we need to be more creative for sellers. And what is something that you think with renovation loans that we could do to be creative with a seller?
Yeah, I think probably the biggest thing is agents make a mistake of writing cash only on their public comments. House being sold as is, seller unwilling to make repairs, cash only offers required. See that a lot. And, it's kind of untrue. There are financing options that are available. As long as we're looking at a residential property, 1 to 4 units, it should qualify for renovation financing. So a couple of suggestions that I would make is, make sure that as an agent in your public remarks that you're mentioning that, renovation financing or fixer-upper financing is available for this property. And then in your agent to agent remarks behind the scenes, you might even want to share lenders' contact information, because yes, these loans are available, but it's hard to find a lender to do them. And it's harder to find a lender who knows how to do them correctly. So you might want to give your buyers a leg up and share some lender information, contact information, so they know who to call.
Well, I'm so excited for all of these great renovation loan options that you shared with me. And I really look forward to sharing them with my clients and having you as a resource, because you are a wealth of knowledge. When I first spoke with you, I was just shocked at what you had to offer, because we're just so used to the traditional loans that some of this really creative loan financing is just pushed to the background. And I am learning so much by talking to lenders, and I think you're definitely the go-to. I get why you're called the RENO-GAL. You can answer all of my crazy questions, so I appreciate that. And I really just thank you for participating in this with me today. And I hope that if people have questions, they reach out to me and then to you as a resource, as a lender. So again, thank you so much, Jennifer. I appreciate it.
You're welcome. You're welcome. It gives you another tool in your tool belt, right?
Yes, absolutely. Yeah, absolutely. Well, thank you so much. And, if you have questions regarding renovation loans, feel free to reach out to me and I can put you in touch with Jennifer, or reach out to Jennifer directly. We will put our information at the end of this live so that you guys can see that. But again, thank you so much.